Bitcoin has exactly 13 months before the most important moment in its history. Governments are making a decision in 2026 that will either send Bitcoin to $150,000 or kill it completely. And you need to know which one. Look, I don't care if you love Bitcoin or think it's a scam. What I'm about to show you transcends personal opinion. This is about money, power, and a battle for the future of the global financial system. And whether you own Bitcoin or not, what happens in 2026 will affect your wealth, your savings, and your financial future. Let me start with the current situation. Bitcoin is trading around $93,000 as I record this in December 2025. It's had an incredible run over the past 2 years. Many people have made life-changing money. Institutional investors are buying. Major companies are adding it to their balance sheets. Some countries are exploring it as a reserve asset. But beneath the surface, a war is brewing. A war between the old financial system and the new, between central banks and decentralized currency, between government control and individual freedom. And 2026 is when this war reaches its climax. Here's why Bitcoin faces an existential moment. In 2026, multiple governments around the world are launching their own central bank digital currencies, or CBDCs. These are digital versions of national currencies, controlled entirely by central banks. The US is launching a digital dollar. The European Union is launching a digital euro. China already has the digital yuan in operation and is expanding it. Over 130 countries are in various stages of developing or implementing CBDCs. Why does this matter for Bitcoin? Because CBDCs are the government's answer to cryptocurrency. They're digital, they're convenient, they're programmable. But unlike Bitcoin, they're completely centralized and controlled. And here's the critical point. When governments launch their CBDCs, they're going to face a choice. Do they allow Bitcoin to exist and compete with their digital currencies? Or do they ban Bitcoin and force everyone to use only government-controlled digital money? This decision will determine Bitcoin's fate. If governments allow it to exist, Bitcoin becomes the ultimate alternative to government money. It's the escape hatch. It's the way people can opt out of centralized control. And in that scenario, Bitcoin's value goes much higher, potentially $150,000 or more. But if governments decide Bitcoin is a threat, if they ban it or regulate it to death, Bitcoin goes to zero. Not slowly, fast. Because most of Bitcoin's value comes from the expectation that it will be widely adopted and usable. If it becomes illegal or impossible to use, that value disappears. This isn't speculation. We're already seeing governments move in this direction. Let me show you the evidence. In 2024, the European Union passed the Markets in Crypto Assets Regulation, or MiCA. This law created strict rules for cryptocurrencies. It requires exchanges to verify customer identities. It bans privacy coins. It gives regulators extensive power to monitor and control crypto transactions. The United States is working on similar legislation. The Financial Innovation and Technology for the 21st Century Act is moving through Congress. It would give the SEC and CFTC broad authority over cryptocurrencies. It would require registration, reporting, and compliance with extensive regulations. China has already banned cryptocurrency trading and mining. They shut down all domestic exchanges. They made it illegal for Chinese citizens to buy or sell crypto. Why? Because they're launching the digital yuan and they don't want competition. India has gone back and forth, but they're moving towards strict regulation or outright bans. Russia is considering similar measures. Many countries are following China's playbook. The pattern is clear. As governments launch their own digital currencies, they're cracking down on decentralized alternatives like Bitcoin. They're setting the stage for a world where only government-approved digital money is legal. Now, here's where 2026 becomes critical. The Bank for International Settlements, which is essentially the central bank for central banks, has coordinated the rollout of CBDCs globally. They've set 2026 as the target year for major economies to have their digital currencies operational. This isn't coincidence, this is coordination. They want all major countries launching CBDCs at roughly the same time, and once the CBDCs are live, they want to eliminate competition. In March 2026, the G20 is meeting to discuss cryptocurrency regulation. This meeting will include representatives from the world's largest economies. They'll be discussing coordinated global action on Bitcoin and other cryptocurrencies. If they decide to ban or severely restrict Bitcoin globally, it's over. Even if some countries allow it, if the major economies ban it, Bitcoin loses most of its utility and value. But if they decide to allow it to exist, if they recognize that attempting to ban it would be futile or counterproductive, then Bitcoin survives and thrives. It becomes the alternative to government money, and its value explodes. This is the fork in the road. This is why 2026 decides everything. Let me walk you through both scenarios so you understand what's at stake. Scenario 1, Bitcoin goes to $150,000 or higher. This happens if governments decide to tolerate Bitcoin as an alternative to CBDCs. In this scenario, as CBDCs roll out, people start to see the downsides. They realize that digital currencies give governments complete control over money. Governments can track every transaction. They can freeze accounts. They can impose negative interest rates. They can program money to only be spendable on approved items. They can set expiration dates on money to force spending. This level of control scares people. Many people want an alternative, and Bitcoin is the obvious alternative. It's decentralized. No government controls it. Transactions are pseudonymous. Nobody can freeze your Bitcoin if you control your own keys. As more people recognize this, demand for Bitcoin surges. People want a way out of the CBDC system. They want financial privacy. They want to protect their wealth from government control and debasement. Institutional investors see this trend. They increase their Bitcoin allocations. Companies add more Bitcoin to their balance sheets. Some countries quietly accumulate Bitcoin as a hedge against the digital dollar system. Supply is limited. There will only ever be 21 million Bitcoin. As demand increases and supply remains fixed, price has to rise. Simple economics. With global wealth in the hundreds of trillions, even a small percentage flowing into Bitcoin pushes the price dramatically higher. $150,000 is actually conservative in this scenario. If 1% of global wealth flows into Bitcoin, we're looking at prices potentially over $500,000 per coin. If entire countries start using Bitcoin for international trade to avoid CBDC surveillance, even higher, in this scenario, Bitcoin becomes digital gold. It becomes the ultimate store of value in a world where government currencies are being debased through money printing, and CBDCs give governments unprecedented control. Bitcoin mining continues and expands. The network becomes more secure. Second-layer solutions like Lightning Network make Bitcoin more usable for daily transactions. The ecosystem matures, and Bitcoin cements its place as a permanent part of the global financial system. This is the optimistic scenario, and it's entirely possible. Because banning Bitcoin is actually very difficult. Bitcoin is decentralized. There's no company to shut down, no CEO to arrest, no central server to seize. It's a network of computers all over the world running software. Stopping it would require shutting down the internet itself. Even China, with its extensive control over the internet and its population, couldn't completely eliminate Bitcoin. They drove it underground, but people still find ways to access it. And in freer countries, enforcement would be even harder. Governments might recognize this. They might decide that trying to ban Bitcoin is futile and will only drive it underground. Better to allow it to exist in a regulated framework where they can at least monitor and tax it. If that's the decision they make in 2026, Bitcoin survives and thrives. Now let me show you scenario 2. Bitcoin goes to zero. This happens if governments coordinate a global crackdown on Bitcoin. In this scenario, the G20 meeting in March 2026 results in an agreement. All major economies will ban cryptocurrency trading, mining, and possession. Banks will be forbidden from processing cryptocurrency transactions. Exchanges will be shut down. Penalties for violating these rules will be severe. The reasoning will be framed as protecting consumers, preventing money laundering, and maintaining financial stability. But the real reason is control. Governments want everyone using their CBDCs, where every transaction can be monitored and controlled. The ban is announced simultaneously across multiple countries. The United States, European Union, United Kingdom, Japan, South Korea, and other major economies all implement similar rules at the same time. Bitcoin's price crashes immediately. If you can't legally buy, sell, or use Bitcoin in any major economy, its utility disappears. Exchanges shut down or block users from affected countries. Liquidity evaporates. Some people try to hold on, hoping the ban will be reversed. But as enforcement increases, as people are prosecuted for possessing or trading Bitcoin, fear drives even the true believers to exit. Mining becomes unprofitable and risky. Why spend money on electricity and equipment to mine something that's illegal to sell? Mining operations shut down. The network becomes less secure. A death spiral sets in. Falling price leads to less mining. Less mining means slower, less secure network. This drives more people to exit. Price falls further. More miners quit. The network struggles. Eventually, it becomes unusable. Bitcoin doesn't go to literally zero overnight, but it goes to effectively zero. Maybe it trades at $100 or $50 on underground exchanges. But for practical purposes, it's dead. All the value that was based on Bitcoin becoming a global alternative currency has disappeared. The trillions of dollars in market cap evaporates. Everyone who held Bitcoin loses most or all of their investment. Companies that put Bitcoin on their balance sheets have to write down massive losses. This scenario is also possible. Because, unlike the first scenario, this one doesn't require governments to successfully eliminate Bitcoin technologically. They just need to eliminate its utility by making it illegal and impossible to use in normal commerce. You don't need to shut down the Bitcoin network if you can make it illegal for any business to accept it, illegal for any bank to process transactions related to it, and dangerous for individuals to possess it. Under this scenario, Bitcoin goes from a potential reserve asset to digital contraband. And contraband doesn't hold value unless there's a functioning black market. The underground crypto market would be a fraction of the size of the legal market we have today. So which scenario happens? Now let me show you the factors that will determine the outcome. Factor 1, the success or failure of CBDCs. If CBDCs roll out smoothly and people embrace them, governments will feel confident. They'll believe their digital currencies are superior and Bitcoin is unnecessary. This increases the likelihood of a ban. But if CBDCs face resistance, if people are wary of the control they represent, if there are technical problems or security issues, governments will be less confident. They might decide allowing Bitcoin as a pressure valve is better than forcing everyone into a system people distrust. Early signs are mixed. China's digital yuan rollout has been slower than expected. People are reluctant to use it because they know the government can track every transaction. The European Central Bank is facing privacy concerns about the digital euro. Some EU citizens are already expressing opposition. If this resistance grows, it works in Bitcoin's favor. Governments might decide they can't force adoption of CBDCs if there's no alternative. Allowing Bitcoin to exist might actually help CBDC adoption by making government digital currencies seem less coercive. Factor 2, the dollar's status. If the US dollar remains the dominant global reserve currency, the United States can afford to ban Bitcoin. They're confident in their monetary system and see no need for alternatives. But if the dollar is losing reserve status, if de-dollarization is accelerating, the calculation changes. The US government might see Bitcoin as a tool to maintain financial relevance. If China and others are moving to gold and alternative currencies, maybe the US should embrace Bitcoin rather than fight it. Current trends suggest the dollar is weakening. The BRICS nations are building alternative systems. Countries are reducing dollar reserves. If this continues through 2026, it might make US policymakers more open to Bitcoin. Factor 3, lobbying and political pressure. The crypto industry is now large enough to have political influence. Coinbase, Binance, and other major players have significant resources. They're lobbying governments heavily. They're arguing that banning crypto would be a mistake that drives innovation and capital to other countries. Some politicians are sympathetic. They see crypto as innovation and don't want to stifle it. They have constituents who own crypto and will vote based on this issue. But other politicians see crypto as a threat. They're aligned with banks who want to eliminate competition. They're concerned about crypto's use in illegal activities. They're ideologically opposed to money outside government control. Which side wins this political battle will partially determine the outcome. If pro-crypto forces can prevent coordinated global bans, Bitcoin survives. If anti-crypto forces prevail, Bitcoin faces severe restrictions. Factor 4, enforcement capability. Even if governments want to ban Bitcoin, can they actually enforce it effectively? In authoritarian countries like China, enforcement is easier. The government controls the internet and can monitor citizens extensively. But in democratic countries with stronger privacy protections, enforcement is harder. People can use VPNs. They can use decentralized exchanges. They can trade peer-to-peer. They can hold Bitcoin in self-custody where authorities can't easily seize it. If governments recognize that enforcement would be difficult and costly, they might decide regulation is better than prohibition. They can at least tax and monitor regulated crypto activity. A ban just drives everything underground where they have no visibility at all. Factor 5, international competition. If the United States and Europe ban Bitcoin but other countries allow it, those countries gain an advantage. They attract crypto businesses and talent. They become hubs for innovation. They benefit economically. Singapore, Switzerland, El Salvador, and others have been crypto-friendly. If they continue this approach while major economies ban Bitcoin, they'll see an influx of capital and entrepreneurs. Major economies might recognize this and decide they can't afford to ban Bitcoin if it means ceding this entire industry to competitors. So which way do these factors point? Let me give you my analysis. I think the most likely scenario is somewhere in the middle. Not a complete ban, but not full acceptance either. Governments will implement heavy regulation. They'll require extensive KYC and reporting. They'll tax crypto transactions heavily. They'll make it difficult, but not impossible to use Bitcoin. This middle path satisfies multiple constituencies. It allows governments to monitor and control crypto activity. It appeases the banks who want crypto restricted. But it doesn't completely ban something that's difficult to enforce and would anger millions of voters. In this scenario, Bitcoin survives but faces significant headwinds. But here's the thing, I could be wrong. The actual outcome might be one of the extremes. Full embrace or full ban. That's why 2026 is so critical. The decisions made next year will determine which path we're on. And that's why you need to pay very close attention to what happens. This isn't something you can ignore. Whether you own Bitcoin or not, you should be watching. So what should you do? How should you position yourself for these possible outcomes? If you don't own any Bitcoin, consider buying a small amount, not your life savings, not money you can't afford to lose, but maybe 1 to 5% of your portfolio. Why? Because if the optimistic scenario happens, that small allocation could grow significantly. Bitcoin going to $150,000 from $95,000 is a 58% gain. On a small allocation, that's meaningful without exposing you to catastrophic loss if it goes to zero. This is what investors call an asymmetric bet. The potential upside is large relative to the downside. You risk losing maybe 5% of your portfolio, but you could gain substantially if Bitcoin thrives. If you already own Bitcoin, think carefully about your position size. Do you have too much concentrated in one asset that faces existential risk in 2026? Maybe consider taking some profits and diversifying. I'm not saying sell everything. If you believe in the long-term vision, keeping a core position makes sense. But reducing your exposure to a more manageable level reduces your risk if the pessimistic scenario unfolds. Consider 20 to 30% of your crypto holdings. That way you're still positioned for upside, but you've de-risked. You've locked in some gains and diversified into other assets. Third strategy, watch for signals. The G20 meeting in March 2026 is the key event. Pay attention to what comes out of that meeting. Are governments moving toward coordinated restrictions, or are they signaling acceptance of crypto within a regulated framework? If you see signals of a global ban coming, that's your warning to exit. Don't wait for the actual ban. By then, it's too late. The market will crash before the ban is formally implemented. If you see signals of acceptance, that's your opportunity to add to positions. The market might not fully price in the positive scenario immediately. You could have a window to buy before Bitcoin surges. Fourth strategy, use stop losses if you're a trader. If you own Bitcoin for speculation rather than long-term holding, set a stop loss to protect yourself. Stop losses aren't perfect. You might get stopped out and then miss a recovery, but they protect you from catastrophic loss. In a scenario where Bitcoin goes to zero, you'd rather take a 20% loss than a 100% loss. Fifth strategy, diversify across cryptocurrencies. Don't put everything in Bitcoin. Consider holding some Ethereum, which has different use cases and might face different regulatory treatment. Ethereum is a platform for decentralized applications. Governments might be more accepting of it because it's not directly competing with government money the way Bitcoin is. It's more like infrastructure. Or consider holding some stablecoins, which are pegged to dollars or other currencies. These might survive even if Bitcoin is banned because they're not competing with government money. They're just digital representations of existing fiat currencies. Diversification across crypto assets gives you exposure to the upside, while reducing concentration risk in any single asset. Sixth strategy, self-custody. If you own Bitcoin, make sure you control it. Don't leave significant amounts on exchanges. Exchanges can be shut down, accounts can be frozen, governments can seize exchange assets. Get a hardware wallet. Transfer your Bitcoin to it. Control your own private keys. This way, even if exchanges are shut down or accounts are frozen, you still have your Bitcoin. In a ban scenario, this might not save you. It would be illegal to hold it, but at least you have options. You could hold it hoping the ban is reversed. You could move to a jurisdiction where it's legal. You control your destiny rather than having someone else control it for you. Seventh strategy, stay informed. Follow crypto news closely throughout 2026. This is not a time to be passive. You need to know what's happening in real time. Follow regulatory developments in major countries. Watch what the Federal Reserve and ECB say about CBDCs and crypto. Pay attention to legislative activity in Congress and the EU Parliament. The more informed you are, the faster you can react to changing conditions. In volatile markets, speed matters. Those who react first to new information often do better than those who are slow. Eighth strategy. Consider the tax implications. If you've held Bitcoin for a while and have significant gains, selling will trigger capital gains taxes. This might influence your decision about whether to take profits. If you're in the US and you've held for over a year, you pay long-term capital gains tax, which is lower than short-term rates. This might make it more attractive to sell and diversify even if you think Bitcoin will go higher. Consult with a tax professional about your specific situation. The tax consequences of selling might influence your risk management decisions. Ninth strategy, don't get emotional. Bitcoin holders can be very passionate. They believe deeply in the vision. This is admirable, but it can cloud judgment. If evidence emerges that governments are moving toward a ban, don't let your belief in Bitcoin as ideology blind you to the practical reality that a ban would devastate price. Be willing to exit if that's what the evidence suggests. Similarly, if you're skeptical of Bitcoin, don't let that skepticism make you miss an opportunity. If governments signal acceptance and Bitcoin surges, be willing to participate in the upside. Stay rational. Make decisions based on evidence and probability, not emotion and ideology. 10th strategy, have a plan. Decide now before things get volatile what you'll do in different scenarios. If Bitcoin hits $120,000, will you take profits? If it drops to $80,000, will you buy more or sell? If major countries announce bans, will you exit immediately? Write down your plan. Having predetermined rules helps you avoid emotional decisions in the heat of the moment. When Bitcoin is dropping 20% in a day because of regulatory news, you won't have time to think clearly. You'll be emotional. If you have a plan you made when you were calm and rational, you just follow the plan. Now let me address some objections and questions I know people have. Bitcoin is decentralized and can't be killed by governments. Technically true, but practically misleading. Governments can't shut down the Bitcoin network, but they can make it illegal and unusable in normal commerce. And if you can't use it, its value collapses even if the network still exists. Bitcoin has survived regulatory threats before and will again? Maybe, but this time is different. This time, governments are launching direct competitors in the form of CBDCs. They have more motivation to eliminate Bitcoin than they did before. And this time, we're seeing coordinated global action rather than isolated country bans. A coordinated G20 ban would be far more damaging than previous regulatory actions. I'm holding Bitcoin for the long term, so short-term volatility doesn't matter. Long term is great, but only if Bitcoin has a long term. If it gets banned globally, there is no long term. It goes to zero. You can't just ignore existential risks because you're a long-term holder. $150,000 is too conservative. Bitcoin will go much higher. Maybe. If the optimistic scenario plays out, $150,000 could just... I'm using $150,000 as a near-term target for 2026. Long-term, if Bitcoin becomes a global reserve asset, it could go to $500,000 or even $1 million per coin. But we have to get through 2026 first. If Bitcoin doesn't survive the regulatory decisions coming next year, those long-term price targets don't matter. Banning Bitcoin would be a violation of freedom. I agree. But governments have banned many things throughout history, regardless of whether it violates freedom. Gold ownership was illegal in the US from 1933 to 1974. If governments decide Bitcoin threatens their monetary control, they might ban it regardless of philosophical arguments about freedom. I'll just move to a country where Bitcoin is legal. That's an option, but it's a drastic one. Most people can't or won't move to another country just to access Bitcoin. And if only small countries allow it while major economies ban it, Bitcoin's utility and value will still be severely limited. Now let me give you my personal take. I own Bitcoin. Not a huge amount, but a meaningful position. I've held it for years, and I believe in the technology and the vision, but I'm also realistic about the risks. I know that 2026 is a critical year. I'm watching developments very closely. If I see clear evidence that governments are moving toward coordinated bans, I will sell. I won't hold on for ideological reasons and watch my investment go to zero. I'll exit and redeploy the capital elsewhere. But if I see evidence that governments are accepting Bitcoin within a regulatory framework, I'll hold and potentially add to my position. Because in that scenario, Bitcoin's long-term potential is enormous. I'm also diversified. Bitcoin isn't my whole portfolio. It's not even my whole crypto portfolio. I own other assets that would do well in different scenarios. This way, regardless of what happens to Bitcoin, I'm positioned to do okay. This is the rational approach. Hope for the best, prepare for the worst, stay flexible, and react to evidence. Now let me tell you what I'm watching for, specifically in the first half of 2026, January through February 2026. Watch for CBDC launch announcements. The Federal Reserve should announce the timeline for the digital dollar. The ECB will update on the digital euro. If these launches are imminent and governments are marketing them heavily, it suggests they're serious about displacing crypto. Also, watch Bitcoin's price action. If Bitcoin is struggling to break above $100,000 and facing resistance, it might be anticipating regulatory headwinds. Markets often price in events before they happen. Watch for any pre-G20 statements from major governments. If the US, EU, or China make statements about cryptocurrency policy ahead of the March meeting, these will give clues about the direction of the G20 discussions. March 2026. The G20 meeting is the critical event. Whatever comes out of this meeting will set the direction. If there's an agreement on coordinated crypto regulation or restrictions, that's the signal. Pay attention not just to what's officially announced, but to leaked information and unofficial statements. Sometimes the real story comes out through leaks before official announcements. If the G20 signals acceptance of crypto within a regulatory framework, Bitcoin probably rallies. This is when you'd want to be positioned long. If the G20 signals restrictions or discusses coordinated bans, Bitcoin probably sells off hard. This is when you'd want to be reducing exposure or exiting. April through June 2026, watch how markets react to whatever the G20 decided. If Bitcoin is rallying strongly after positive G20 outcomes, the optimistic scenario is playing out. If Bitcoin is struggling or falling after negative G20 outcomes, the pessimistic scenario is unfolding. Also watch for follow-through. Do governments actually implement what they discussed at the G20? Sometimes international meetings produce agreements that aren't followed through on. The actual policy implementation is what matters more than the meeting statements. By mid-2026, we should have a much clearer picture of which scenario is unfolding. The decisions will have been made. The policies will be getting implemented. The market will be pricing in the outcome. This is when you make your final positioning decisions. If the optimistic scenario is confirmed, you can hold or add with more confidence. If the pessimistic scenario is confirmed, you need to exit if you haven't already. The key is to stay flexible and react to evidence. Don't lock yourself into a position based on hope or ideology. React to what's actually happening. Let me give you some specific price levels to watch. If Bitcoin breaks above $110,000 in early 2026, it suggests the market is anticipating positive regulatory outcomes. The path to $150,000 is opening up. If Bitcoin falls below $85,000, it suggests the market is anticipating negative regulatory outcomes. The risk of going much lower is increasing. If Bitcoin is stuck between $90,000 and $105,000, we're in a waiting pattern. The market is uncertain and waiting for clarity from the G20 and regulatory developments. Volume is also important. High volume moves tell you the market is making a real decision. Low volume moves might just be noise. Watch Bitcoin's correlation with other risk assets. If Bitcoin starts moving independently of stocks, it suggests crypto-specific factors are dominating. That's when regulatory news has the biggest impact. Now let me address one final critical point. The decision in 2026 doesn't just affect Bitcoin, it affects the entire crypto ecosystem. Ethereum, Solana, other altcoins, DeFi protocols, NFTs, everything. If governments embrace crypto, the whole space thrives. If they crack down on Bitcoin, they'll crack down on everything else too. This is an industry-wide existential moment. So even if you don't own Bitcoin specifically, if you're in crypto at all, 2026 matters to you. The regulatory decisions will impact everything in this space. This is why I keep saying 2026 decides everything. It's not just about Bitcoin's price, it's about whether decentralized finance has a future, whether blockchain technology gets to flourish or gets stamped out, whether we move toward financial freedom or financial control. The stakes are enormous, not just for your portfolio, but for the future of money itself. So what's my prediction? Which scenario do I think actually happens? I think Bitcoin survives, but faces heavy regulation. I think governments will try to control it rather than ban it outright. I think Bitcoin reaches $120,000 to $140,000 in the next 18 months as inflation continues and some institutional adoption grows. But I think Bitcoin faces constant regulatory pressure that prevents it from reaching its full potential. It won't go to zero, but it won't become the global reserve asset that true believers envision. This is the muddy middle. Not the best outcome, not the worst. Bitcoin survives but remains a niche alternative rather than becoming mainstream money. But I could be completely wrong. We might get full embrace or full ban. That's why you need to watch carefully and be ready to react. The next 13 months will tell the story. By the end of 2026, we'll know. Bitcoin will either be on a path to $150,000 and beyond, or it will be dead or dying. There is no middle ground in the long run. Either Bitcoin succeeds and it becomes a permanent part of the global financial system, or it fails and disappears. 2026 is when we find out which one. So pay attention, stay informed, have a plan, be ready to act. This is the most important moment in Bitcoin's 16-year history. Don't miss it. If this video helped you understand what's at stake in 2026, share it. Your friends who own crypto need to see this. Your family who's thinking about buying Bitcoin needs to understand the risks and opportunities. Subscribe if you haven't already. I'll be covering every development in 2026 closely. You want to be informed in real time as this unfolds. Leave a comment. Tell me what you think happens. Does Bitcoin hit $150,000 or go to zero? Are you buying, selling, or holding? I want to hear from you. Thanks for watching. Stay alert, stay informed, stay flexible. And whatever you do, don't ignore what's happening in 2026.